Good morning, my friends, and welcome to the ThetaWaveTrader. This is the Breakfast Club. My name is Darren Hancock, and it is Friday, November, not October, November the 8th, 2024. And let's have a look at the markets. So yesterday, or this morning, we finally hit that standard deviation that we were looking for at 258. And I think the high last night was 263. So just hit over that one standard deviation, looking for this reverse. We come back up into, I'm looking for 21,202 to 21,219. That's my upside right now. And I would like to see a reaction off of that. If we don't get that, I'm looking at this order block here. So I'm looking for any opportunity to see a decent reversal here. Down on the 1 minute, there's still a fair value gap in here that hasn't been filled yet. But we have hit the open of this candle. We have taken out the low, so we typically trade back into that. And there's a reversal right there on the hourly. So everything's fair game now. So now we start hunting for a reversal pattern. And we're starting to see one here. But I want to see a break in structure here before we start getting down lower. Like right now, we're just inside a small range, and we've already accomplished more than 50% of that with this run inside here, back to a discount inside that range. So we're consolidating now, and it's still choppy. I want to see something more distinctive. The objective for today is to hunt for the TGIF Friday. So if we take this daily chart or daily candle, we take that whole range from Monday's open or Sunday's open, depending on how you're looking at it, to the high, let's say, of today. That puts us in the 20 to 30% range back in here. So your downside is anywhere from 28.91 all the way up to 21.17. So that's the downside hunt for today. If we do make a new high, we'll extend that range and still look for that 20 to 30% of the weekly range retracement if we get that today. And it looks like we've got that started on the hourly. So again, I would not want to see, ideally I wouldn't want to see 21,209 get taken to the upside. I'd like to see a little portion of this SIBI we have right here remain open as we go lower. If it does come back to rebalance it, I wouldn't want to see more than a close above 234. Otherwise, definitely we're going higher, making a new high for the day. So we can keep that in mind. Let's look at ES. Has ES giving you the same kind of, I don't know why this keeps bumping onto the other side. Stand by. Lines and scales and auto. We don't want to be auto. We want it to the right. We'll be okay with that. And it's given us our reversal here as well. And you see how we've already pulled right back into that range, into that consolidation. So if we get a full fill of that consolidation, you don't want to see it close above that. So I'd like to see this start leading the way with leaving a portion open. But if it fills it, I'm okay with that too. And start heading lower. What's Dow up to? Let's look at Dow on the 1 hour. Has it given us the same setup that we're looking for? Oh, a little more sloppy here on the hourly, huh? Okay, yeah, we still got that. Mind you, there's a lot more chop versus the down and the reverse back into that SIBI. We don't really have a SIBI here. We do have an immediate rebalance, which has been played into multiple times. We're keying off this last down close candle here. So I'd like to see that roll over and start coming back down again as well. Again, if we break through it, come back to it, we're looking for higher prices. These got relative equal highs, so you'd think they wouldn't want to leave those things untouched before going lower. So if we make a run on this liquidity, look for a quick 10 o'clock run on that, and then the reversal, we might get that after 10 o'clock today. Like we make one more run up here. There's an idea. We don't know for sure, but we'll wait and see. That's how I'm kind of starting off my bias for the day, with a general idea that we look for on a Friday. And we may not get that till the afternoon. Remember, usually 2 o'clock, around 2 o'clock, there's the latest you'll see. It'll start to move back into 30% of the range. But because the range has been so big this week, it's quite a sizable retracement when you look at, where was it? 28.91 is the 30% retracement. That's still just shy of 400 handles for the day. That's a lot of movement. All right. Let's get over to Dixie. I got nothing for you on Dixie right now. We'd have to get below the daily fair value gap here for me to consider this going bearish. It doesn't feel bearish, it just feels like it's just sitting inside this range. Yeah, we can still come back up into this range here, take out these equal highs. Get back into this new week opening gap back in July. We've retested it twice. One more time into the consequent encroachment of that. And then roll over maybe. Don't know. It's flat right now, even on the hourly. So slightly bullish if you look at this on the hourly basis inside that range. So again, I'd be aiming for these two highs and then see where that goes from there. So if we get that continue higher, then we're looking for lower in foreign currencies. So if we're looking for lower here, looking for a fill of this fair value gap or back into this breaker here. Yeah, look for return to an old high, which I think the bodies of the candles at 29,320, and then the potential fill of this fair value gap below you here at 29,130 or 137 for pound for Euro. We have morning, Hans. Yeah, I'm up early this morning. Didn't get much sleep last night. A little foggy brained right now. My last day or so here, so gonna enjoy my parents while I can, and then gonna watch the football game this weekend. Then head over to Carla's place. It's about an hour or so away, her dad's place, and then heading back. Anyway, Euro. Where are we at with Euro? If we close below 1763, we're looking for these lows. So I'm looking for, we're going to get down a little lower than this yet, 1763. If we close below 1763, then we'll go lower. We had a nice little reverse in oil. Trade back all the way up into this order block here. Take out that high, reverse, drop below, come inside, trade below this level here. You don't get an opportunity to get back in on it here or here if you're looking for the market structure breaks. This is the only place you would have caught it right there. When you gap down, come back up quickly, tap it, and run away. Same place here. If you're looking for that one, traded below it, instantly gapped up, tapped it, and away you went. Trade back into this one more time before finally sweeping these lows back into that little range. The little magic box would have been right here. We've come back, hit the edge of it. And now we have a break-in structure to the upside using this candle for support. I'd like to see that get back into this range now. Got to get a body above here yet. And then we're looking for a run back into that range. And the Canadian dollar, I don't even like the looks of the Canadian dollar on here on a 5-minute chart. It's just way too choppy for me. Wheat's still sitting in that limbo. I'm still looking for that to end up coming lower. We still have that downside objective down here. We've run all the way back up into that premium array again. And now we'll see how we act off of here. We're still waiting for it to trade through it. Now that we've just taken out this high, if we get a run right back down below this low, we're obviously heading for the sell side liquidity. I'd like to see this remain open, create a fair value gap, trade through it to it, and then keep coming down. Corn. Corn has finally filled that little gap in here one more time. So next one is the mean threshold of this candle, which is sitting $4.30. So if you lose that with corn, on a close that is. Now for coffee, I'd like to see coffee take out 255, 256 on a close, and then use that go lower inside that range. And sugar, let's look at sugar here. Sugar, we're looking for might want to come back into this range. An extension. This could be running higher now. If we do, look for 2.5 on the swing projection. We have to get a close above 22.32 though for me. Ideally, if we get above 22.30 on a close, come back, find some support off this candle, and you want to get to the mean threshold of that one and start looking for higher prices. Then start looking for this as a swing projection. Pull your fib tool in here and do swing projection on sugar. If that's your thing. If we end up losing 22.10 on a close, look for these equal lows to potentially be the next hunt. We're back inside this range deeper. My guess is we're looking for this new day opening gap down here on the 7th. This week's opening gap, which was yesterday. Look for those two levels to be hunted for today in sugar. If we lose 22.11 on a close. Live cattle. Yeah, we're looking for cattle to go lower. It could come up as high as 186.62. Sorry. Get rid of this one here now. We get rid of that. Could come high as 187.27. Want to see a portion of this stay open and keep coming lower. Ideally, it's hit right off the level we like right now. I like to see that just keep pushing lower now today. Cocoa has swept the lows. Feels heavier to me. So I'd like to see this come back down through this candle, yesterday's candle. And we're going to keep coming lower in cocoa. We'd have to clear this high out here for me to start thinking bullish again on a close. Otherwise, still downside in cocoa. Lean piggies. Back into the consequent encroachment of the gap. So we're in the middle of it, so I would expect to see it come down a little lower. 79,975, 79,625, somewhere around there. Bitcoin is holding its own. Oh, sorry, that's wheat. I don't know why wheat's up there. It's supposed to be Bitcoin. All right. What do we have here? They're looking for $80,000 for Bitcoin. I got nothing for you in Bitcoin yet, on the hourly anyway. There's nothing super dramatic in the hourly. Even the 5 minute is, it did give us a reversal here. Inside a range, back into the box to box or just premium to discount arrays. I want to see it. It's got to break this low here on a close to start hunting lower. And it's got to break 76, 272 on a close to go higher. Otherwise, we're still bouncing around inside this range here. So I haven't got much there for Bitcoins for you, sorry. Gold, what do we got for gold? Well, we do have support to go higher right now. Yeah, I do see higher for gold. I still see a run back up into this fair value gap above us. We're through the mean threshold of this candle. We're right into the mean threshold of that candle. So now you definitely want to see it. There you go. You want to see it keep going higher. I like that. There you go. You get back into here. We're going to go long on that. I just want to start going, coming back into that higher range right there. I'll have a look at that. TSX. Let's look at that one. TSX. Oh, mom and dad will be happy for that. That's good. We're making a new, coming up for a new higher high. See if they break 25,000. Morning, Zach and RS. Good morning. Gas. Let's come right back into that gap. We're trading around in that gap for a bit. I'm going to see that start climbing out of here. Trump said he wants to deal with oil and natural gas, so we'll see how that works out in the new year. We could have a nice bullish trend on gas and oil next year if Trump wants to do the job he says he will do with it. I don't even know why I show these stocks. They apparently just higher dividend yield stocks, and for the Americans. And I'm not going to go into a huge analysis on those, but they're definitely buying opportunities coming for this. Clearing out old lows. Yeah, there's some purchasing opportunities for some of these stocks here. Oh, something you wanted me to have a look at this one. Oh, I think that was silver. Yeah, Craig wanted me to look at that yesterday. So inside that range, discount array hit it nicely. We're looking to get a nice reaction back out of there. Running higher, TransAlta. All these are really good dividend stocks for Canadians. It's crazy when you think about that election. If you would have got in on some of these, you're like, there's a 10% run, 10% run, just in 2 days. You would have made 10% on your money. If you wanted to make 10% on your money in 1 year, and you only have one investment, wouldn't that be crazy if you could have made that all in 2 days? Move to the sidelines and wait for the rest next year. Anyway, let's get back over here. So this is daily. Let's get back into the 1 minute. So here is one higher, one lower. I'm expecting to see 50% of this leg here, whole price. Right there. See if that holds price, and I gotta go just a little bit higher. And I want to see that roll over and come down. Right there would be a CAM 3 model.
Order filled.
I'm just going to go with a CAM 3 here until proven otherwise. Good morning, Craig. How are you guys doing this morning? How are you folks this morning? We do have a bit of a lag this morning. What is that, 30, 20 seconds? Oh, it's about a 30-second lag time. Morning, Danielle. Do you guys have a 30-second lag in yours as well? 22 seconds in yours. Try refreshing your screen, see if that makes a big difference for you. So far, cam 3 is working. Good morning, Edgar. Good morning, good morning. There's a potential for this to pump straight back up here. Should give it a bit more legs, but I don't want to take a loss this morning on a Friday. I don't want to take any losses on my whatever I've accumulated this week. There's that imbalance. It'll still come through here. I like this candle, these two candles right here. Good morning, Darren and community. Good morning, good morning. Craig, D, all or 99% of your trades are based on the 1 minute or 15-second charts, right? Correct. Correct, my friend. See, I'm inside this range here and the rejection block. So I want to pull my stop a little tighter. I want to see this continue pushing lower now. I got a nice cam 3 model. Once I saw it here, I took a cam 3. Now I'm looking for 21,164. There's a little imbalance right there. It could come all the way back and take me out there. Look at these little imbalances. Those just tell me we're going to come back and revisit those. So it's early in the day, so we'll make some money and move it to the sides. Just come back and fill that. If you run all the way through, I'll let you take me.
Stop filled.
That's fine. Always want to pay yourself at rejection block, so let's see if this continues down now or comes back for these little imbalances. It's extreme discount, so, and I just look at that small range I was in. Morning, Hadid. So nice little cam 3 into here. So if we can get, if you continue getting a continuation on this one, you're looking for a further run down into 165, 164-ish. That's where we're kind of looking. And the thing is, if it takes off, it's not one of those things you kind of sweat and worry about. I just saw a nice cam 3 there, and inside a range, we do have this rebalance here, but it didn't come back and get a full rebalance or fulfill. So there's a slight gap sitting right there. We did not run out the lows. You see that? We just hit the low, bounced off of it, and we're pulling back into that range again. So with these two candles I was talking about, those are the two I'm kind of interested in. I think I'm talking kind of quietly. These two candles right here are ideally what I want to see a key off of to keep coming lower. So that could run all the way back up into here. What makes the kick to be profitable and respect the rules? I keep breaking my rules. I don't know why. Karim, you are not alone, my friend. You are not alone at all. Your brain is telling you that it's seeing something that you think is profitable. You haven't seen enough of the price action moving exactly where you want it to go. My advice to you, my friend, for whatever it's worth, is study price action to the point where you're watching every candle and where you want every candle to go. And if you can call each candle and what you expect it to do, where you expect it to go, and it doesn't act the way you want it to act, you're not ready to throw that trade in there yet. Give yourself at least, 1 to 5 candles. You could be bouncing around inside here, but there's a general rule that you want to, or an idea where you want to see price go. So for here, I want to see these two candles provide support, continue to push lower. If I go through those, then I start to change my idea of, am I bullish? If I take out this fair value gap above me, and away aim for that 164. So we got down to the 164, ideally, which is where I was looking. So if we can close below that, then I like to use that as leverage to continue pushing lower. See what I mean? If you start to see price moving the way you want it to, when you do make that trade and you do look at the expectation next, you won't be second guessing yourself. You won't be just changing your rules up because it's acting the way you want it to act. The reason you keep jumping out is because you don't have a sense of certainty or a closer sense of certainty of where you think price is going. Now, I'm not preaching that there's always a sense of certainty everywhere you go, but if you understand price action well enough, you'll start to have a better idea of where you think it's going to go. And then when it's not acting the way you want it to act, you move out of the market and you wait on the sidelines till you see it starting to move. And if you feel the impulse to go in there, then you definitely shouldn't be trading because you're trading on emotion and gambling mentality. And that is not the place to be in a market like this. It eats people like that up for breakfast. It rolls right over you. So somewhere along the line, you have to develop that personal discipline. And I'm telling you this from experience because I blew tens of thousands of dollars and dozens of accounts doing the same thing, breaking my own rules. And I got pretty specific rules. I've always been a bit of a rebel. I've always been a kind of buck the authority, even though, I was in a job that you had to follow rules. You had to follow algorithms to save people's lives. You had to follow rules and algorithms. And if you didn't, people's lives are on the line. So there was some severe consequences, right? Now, for you, that might be just a demo account, but it is a place for you to hone that skill of reading price action. The only way you're going to start to reduce that rule breaking skill is by studying price and being in this. This is where all the work, this is where the rubber hits the road. This is where the professional trader, or you become the professional trader and not the gambler and not the people that are in here just throwing money at the market, hoping that that candle keeps going in the direction you want it to go, right? Because if it doesn't uh, act the way you want it to act, then you might as well just go to a casino and throw your money in a one-armed bandit because that's really what you're doing, right? Your rules are there for a reason, and their rules are established because of what you've studied in price action. Whatever Michael's taught you, whatever you learn here, those specific rules are what will get you through. If you want prosperity, you must follow your rules. You must find a way to overcome yourself. It is the most difficult thing. Reading price is not going to be your issue when you trade. I'll tell you that right now. You can understand price because when you see it, you can't unsee it. It's right there in front of you, and it's always acting the way you want it to act, or hopefully act doing that. But it's got a sense of consistency about it for sure. So if you can't figure out how to get control of that need to get the dopamine fix, you've got a, and I don't envy the younger generation when you've got your head stuck in a cell phone and iPads and things like that all the time. That's where your stimulus is. You're looking for a dopamine hit. And then you go into a market like this and you get this generation or the generation ago. Man, it's tough. It is even harder for them because they're literally hooked on that dopamine hit from electronic devices. That's just my personal opinion. So it's harder for them to say, now, how do I get to discipline? Can you put your cell phone down for a while, or do you feel yourself picking it up constantly? Right? Anyway, long answered question for you, Karim. But if you keep breaking your rules, it's because you don't understand the price action enough yet to feel clean, to feel comfortable leaving your trade in or taking it out. So we've traded through that 165 we're looking for. See how we've traded through it, come back inside it here and went lower. That's what I mean, Karim. Once you understand what price is doing, what you wanted, what we're calling for, want to see that. I pulled my stop lower because it's Friday. I've already made some money this week, uh, and I don't want to lose my cash. So there's a level I didn't want to see it come through, and if it hits it, I'm out. I'm okay with that. That's a 1 minute chart. There's plenty of opportunities today. The markets haven't even opened yet, right? So don't sweat it. You're not going to miss anything. So there's no reason to break your rules because there's a setup that's going to happen. Like we just took a quick cam 3 here for, I don't know how many handles that was. And it doesn't, there's no emotion. You just go, that's what I'm looking for. I'm going to take that. I'm going to look at that range. And if you feel that anxiety kicking in, you feel your guts starting to turn up as soon as you put that trade on, it better not be live funds because that's cortisol, man. That's really bad for your body. And who wants to trade in that kind of, go work at McDonald's. There's no stress there. Well, maybe there is. There used to be when I was working at it many years ago. Jeepers, that's 43 years ago I was doing that. 43 years. It's hard to imagine. I was 16 when I was working at McDonald's. $2 and was it $2.80 an hour? I feel like an old fart saying $2.86 when minimum wage is $15 or something like that now. Anyway, we've swept the lows. Hopefully that helps you, Kareem, because I tell you, buddy, it's you are battling a war that everybody, there ain't a person out there, unless you're psychopathic and you don't have any emotions whatsoever. If you're not, if you haven't dealt with an emotional trade or rule breaking, chasing price, then prepare yourself. It's coming. Just come in and study price action every day, Karim. Get in here on the weekends. Study the best one to study on the weekends because the only one that's open is Bitcoin. And look for your setups and don't even trade it. Just study price. People just don't want to spend the time in a 1 minute chart or a 15-second chart and watch each candle and say, where do I want this to go right now? Where am I inside this range? Where's my bullish order block? Where's my bearish order block? Where's my fair value gap? In price imbalance, what am I reaching for? Where's my rejection block? What quickly am I inside here for me to hold that thought of where that might go? Now that I've swept that low, where do I want to see price go? What does it need to do in order for me to get back up here if that was an upside objective, right? What else do I look for over here that supports price? You've got to study this, and people just, that's why I told you yesterday, there are probably millions of people that have studied Michael's techniques over the years, and very, very, very few, so less than 1% of them will actually make a career out of this. Because who wants to spend the time in here studying every single damn candle and where it's going, what it's doing? And how many people are willing to, after you've thrown live money at it multiple times, are willing to say, I can't do this? How many people give up? We have a throwaway society, disposable. It doesn't work. I try it once, I try it twice, and it doesn't work. In NLP, we have this thing called, it's like a meta program. One of the meta programs is like, how many times do you need something to happen for you to be convinced that it's a truth for you? Some people may look at something and say, well, I see that happen once. That's all I need. As long as I see it happen, I can prove it to myself. Some people say, I need to get my hands in it. I need to play with it first and confirm myself that the sequence works. And I only need to do it once and I've got it. Some people say, I need to see it 2 or 3 times and then I've got it. I'm convinced that it works, right? And other people may say, I will never be convinced. I will always be looking over your shoulder. And we know people like this, right? I'll always be looking over your shoulder and I won't trust that you're doing it right ever. I'm the only one that thinks I know how to do it right. So I don't believe anybody else can. And therefore, you're not going to be convinced. So you run a meta program that's a little tighter than everybody else's. Some people run it a little looser. So in other words, how many times would it take you to fail at something before you realized that you could get it right, that you still believed that there was a correct way of doing it? And some of the greatest discoveries were very serendipitous, obviously, but you look at somebody like uh, Thomas Edison or Alexander Graham Bell. People taking 10,000 attempts to make a light bulb. And when he was asked, hey, 10,000 times, what made you give up? Or what made you not want to give up? He says, well, I just discovered a new way not to make a light bulb. It was exciting. I just kept going because I believed it was possible. And he just found over 10,000 attempts to make a light bulb, and then he finally got it. Colonel Sanders, 109 rejections. How many times do you need to get rejected before you give up? 99% of the people out there have less than 3 before they give up. Less than 3. So you wonder, you're in a market that's designed to wipe you out the moment you make a mistake. So do you have rules? You better have rules. You better follow your rules, because there's nothing worse than being in a market that's designed to kill you, or your account, not kill you, but wipe out your account. Take any money that you put out there. It's designed to take it from you, and you won't even follow your own rules. So there's nothing worse than being in a market that's trying to get you, and you're getting you too. You just jump on the other side. You don't follow your own rules as well. Like, holy smokes, man! You gotta be on your side. You gotta have one person in your corner, and it better be at least you. And if your rules are designed to help protect you, and you don't follow that, you just join the crowd that's out to feed on you. So that's craziness. That's self-destructive. So what's your rule, man? How's that for a long answer, Kareem? While we wait for the markets to play around here. I got on my little soapbox there. Sorry. It's true though, man. You got to reframe it in any way that supports you. And if you look at it as, if I don't follow my rules, I've joined the group of people that's out to take my money. And it just seems so ironic that you're trying to make it and you've joined the group of people that are out to take it because you're not following your damn rules. Okay, so where are we going inside this range? Yeah, I did crude oil. Good morning, Edgar. Have you done crude oil? I missed it. Yes, yes, you did miss it. Let's go back and have a look at crude oil whilst we're waiting for everything else. That's just, I liked this initially, looking for these two or three down up close candles. I was liking that for a run back into this range if we could get above it, and we have not actually traded a candle above that high yet. So as you can see, we've been bashing around from premium to discount over and over again. Here's your premium, here's your discount. So you're right down into the discount. Bodies are respecting that all the way up into the premium. Bodies respect that box to box, bouncing around, still not getting above this mean threshold of this candle. Back into the discount again, back up into the premium again, discount, premium. We, we ran out a little higher, but we still haven't taken out the high yet. Then ran all the way back down through the discount as well. So we ran through the premium, ran through the discount. We extended this small little tiny range here back into that larger range, and we stayed inside the larger range. Mean threshold to mean threshold, like to like, right? So there's the wick. You get up into the mean threshold of that wick, and then you get down to the mean threshold of this wick. Then you come back up, discount, premium. So I'm looking for, you got one here and one here. We've hit the first one here, come back down to the discount one again. Now we're running back up to this one here. So we'll see if we can get through this point on a close, then run for these equal highs, then run up for the upper portion of the wick, and then we'll watch these three. There you go. So we've hit the premium there. We're behind you, Kareem, man. I want you to succeed, buddy. I want you to succeed. I want you to follow your rules, but I need you to write down your rules. Put them on a piece of paper. That's a good sign. See how we've cleared all the way through that premium? Find the support in here now. We want to see a body get above here, this range, and this original one back here. I like if we can get a body here. See how it literally closes on that? Does not give you the body above. It gives you a bit of wick action, but won't give you the body. Now we get the body. Got 30 seconds now. See how that just, you can see how the rule is. Now, if I went down into a lower time frame, let's go to a 15-second chart here, because on the 1 minute, we couldn't see that. We broke through this one. That's great. We broke through that one, and we broke through that one. Now, if we can get anything in here that would find support to go higher, especially right off here where we get market structure, or we're going to extend the range and a market structure break. So watch here. We'll go down to a 15-second chart here. So we have a body break the high right here. See that? Come back, give it a little kiss right here. Poof, off you go. So you got that one. We have a reversal here on a 15-second chart. Body trades above it. We come all the way back down inside. Oh, sorry, we got one right down in here. Up here, trade back into it. You're long right off that perfect entry for a long there. You sit and wait on it, wait on it, wait on it. You get through this candle here. You found some more support. Let it keep going. Now you wait for any reversal to get out of that trade. You've got a perfect entrance right now, and you're still sitting in that for a long. Beautiful on a 15-second chart. Hilarious. Anyway, that's your price action study there. So I hope that kind of helped for you as well, Craig. You like to buy crude on a Friday, hey? Yeah, there you go. See how it's coming back into this range again? And now we've got a body above here. So stop loss would be sitting down in here, all or even down into the bottom of this here. Your stop loss would sit there. And you wouldn't, I'd like to see this stay open. That little dip down in there is beautiful. You want to see that leave here now and start running back up into that range using this consolidation as support. Cam model 1 entry right there. Now, oh, we had a gold trade on here, did we not? Oh yeah, we're up 5 grand. Let's move our gold into profit. Forgot about my gold trade. Isn't that terrible? Forgot all about this trade. Um, so right now it's sitting right. I'm just going to close that out. We're obviously in the premium portion of this range right here. I'll just hit that. I'm good with that. I'll move to the sidelines and kind of just wait. And I want to observe it. You shouldn't leave a trade just willy-nilly like that. You should actually study it, especially if you're only working in a 1 minute time frame. You want to be, you know, being a little more observant. Letting it run like that, then you're obviously trading on a higher time frame. If you're starting off in a 1 minute and you're looking at an hourly or a daily, that's great, but you better be sure you caught the low. That doesn't one more little double tap down there. After taking, I look at this now and I go, oh, look, we just created a little swing point right here. If I blow this up, you'll see it. See that little swing point right there? We've already dropped below it and we're coming back inside it. If we get below that low there, then I'm on the wrong side of the chart and I don't plan on sitting around in here to watch it. So I close out the trade. Now, what I could have done there, sorry, is I could say, okay, so I put my stop loss down here, and if it trades below me and comes back into it, then I'm going to go lower. That's my fail safe. I didn't want to wait for it to come down there, so I'm out. If it does go down there, I'll be like, haha, it's a good thing I got out. I saw that little reverse, and we traded significantly through it, back into it for a short. Now, if we take out that low, we're coming back into this range, and I'll be glad I got out with 5K. Morning, Dave Perry. How are you doing, buddy? Can you explain the CAM 3 model once again, please? Yes, sir, I can. So CAM model 3 is this. So we've got this consolidation here. You see that? So the CAM model 1 is from here. I'm going to draw, I'll point it out to you why I'm looking at this level. So CAM model 1 is from here to here. Sorry, this is a consolidation. CAM model 1 is from as soon as we break a low right there, a body below that low, you trade back into it right there, either the wick or the body. That's a CAM model 1 for continuation down inside the range. A CAM model 2 is 50% of the consolidation itself. So we'll pretend this big piece is not in here. This is, let's just say this just rolled over and went down. That would be a CAM model 2 to there, and you wouldn't want to see a close above 50%. There's 50% right there. So that would be your short. If this leg was not in here, that would be the last short. If you closed a body above that and it came back to it, close out your trade and wait for a break in structure for something significant because you don't want to see more than 50% of that consolidation. That's a cam 2. So Michael's taught 1 and 2. My 3 is if there's a leg that creates a new high like this, you take the leg and you go to the high of the leg and the low. So that's the whole consolidation, the bottom of the consolidation to the top. And you see if it trades back to 50% of that leg right here, 50%, you get short off of that. So you wait for a candle to close below it, come back into it. Now you got confirmation you're going lower. That's what we did there for that short. And you're running for sell side liquidity. You're running for rejection block, half the wick, order block, threshold, whatever consolidation or the fair value gap, imbalance, whatever your objectives are. Keep in mind that there's a shit ton of PD arrays inside that area there that you want to be eyeballing and keeping an eye on and seeing how you respond off of those to go lower. Now my stop loss was sitting like just up in here because I saw this imbalance and thought it's going to come back and take that. I'm already up a couple $100, so I don't want to lose that. I didn't want to give it any wiggle room to come all the way back there because I was looking at this internal range because I do this little micro trading, small ranges. And if that's a small range, I'm already at a premium or an extreme discount already. So take your money, move to the sidelines, and wait for a next little micro trade. Bigger people or bigger traders might want to say, no, I would have looked for a bigger range. I wouldn't have quite bailed on that just yet, Darren. That's fine. If that's your bigger range, then trade your bigger range. Whatever your rule is. I don't want to start breaking mine just for the sake of sitting in front of you guys. Because Kareem will go, what are you doing? You're not even following your own damn rules. And you're preaching to us about it? Come on, damn it. So anyway, that's the Cam 3 model. And I will trade a 1, a 2, a 3. I have multiple. So you have breaker, you trade a breaker. Now usually you typically see if we can trade back into this breaker here that takes out that high, or you'd have to look at this cluster really. It's one buried inside here. That's those 3 candles there that stimulate this run above there's a little swing high, swing lows. That's why I like this one here. It's a swing point, swing point, swing, swing, swing. This one takes all of those out. So I like that one. If you traded through that, you go, okay, well, if you trade through it, then you might want to consider going higher, right? Typically, we look at that as a reversal. We trade back into that candle, we get short from there. Or you look at that whole fair value gap above imbalance and you look to say, can I get back inside that imbalance? That might be another way of looking at it. So there's multiple overlapping models in here. So get good at one, practice it, study it. Where do you want price to go? What do you want price to do? Each and every candle, my friends, each and every one. Okay. I would encourage you if you're new to our channel, you can subscribe. I don't know, you probably hear this every time you go to these channels, but again, it is free. We're just here to kind of help you understand and read price action the best I can. And I'm not going to get it right 100% of the time, obviously, but I will explain whatever logic it is that keeps me in price action. I'll explain where I think price action changes before it happens. That's my objective, is to do this beforehand so you guys can see it before it occurs. So it's not all hindsight analysis. I don't want to be one of those guys that just looks back and says, well, it did this, it did this. Well, let's talk about what it's going to do, not what it's done. I think hindsight analysis is awesome. I still, on the weekends, will go back and I'll do this. And this is what you can do, Karim, as another way of training. I'm a firm believer in training. I did lots of teaching and training in EMS. So I used to be a training supervisor. So I go and do lots. I had my own first aid business for decades. So I love training. So my idea is always learn something more, and always train, always train, always train. Get really, really good. You don't see those um, snowbirds, and with they fly in perfect formation, and they do all those. They don't just go out there and say, "Hey, do you guys want to go flying today?" Sure. Okay, let's all try and stick together. Okay, so we can do that a perfect maneuver. And one of us, I don't know who it is. Let's surprise each other. One of us do a flip, and the other ones will try and follow you. Stay really close, right? They they don't do that. That's not how it works. They will literally sit there and practice and practice and practice. I've seen them sitting in a room where they literally together will sit in chairs in formation in a chair, and they will talk and visually go over their flying routine. Why? They want to get it perfect. They have to be in perfect harmony with one another. And the guy just talks in the room, and they just literally move their arms and their feet together. And you watch them, they work in perfect harmony in a room, sitting in a room in formation. So, why that story? Why that analogy? What I'll do is this: I will go back and I will swipe, 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 swipe like this, like crazy. And then I will go like this. I have no idea where I'm at, and I will go and I will create bars. I'll do this. This is what I do on the weekends. When you're bored, when your wife's going for a pee and you want a couple of seconds to get in the charts and practice, any opportunity you get to uh, study and practice and practice and practice, this is where you'll get good at it. And this is where your rules will get better. This is where all of this will start to come to fruition for you. You change the colors on each one of these. You'll put a red one, a green one. So the red one's your stop loss. The green one is your go and or your entry, and then or an orange is your entry, and then you can make a green as your uh, take profit. That'll be your stop loss. That'll be your entry. That'll be your, and I'll literally go. I'll watch where this is going on this side, and I'll go, where do I want to see price go from here? So one candle, I get to see this one here. So if you don't get something that's got live price action like Bitcoin does, you go back through your charts and you completely scroll through, make one chart bigger, and you close your eyes and you sweep all the way back as far as you can. And then you start going through one candle at a time. You see how it's moving over here? One candle at a time. And you go, okay, at the end of that candle, I'm going to make a decision. At the end of that candle, I'm going to make a decision. Where do I want to see it go? I see this mean threshold has got hit. I like to see that mean threshold get hit. I want to see this imbalance hold price. If we start to go above it, I'm going higher. If we go below it, I want to see it come back into this range, and I want to see this candle down here start to get engaged like it's open. I'd like to see the open get hit. That's what I want to see. All right, so then I wait, and you see if you're correct. We have mean threshold taken now. I go, great. Now, if that mean threshold's taken, I want to see above me. So you pull down. So you want to make sure you go. Now I'm looking for the highs to get taken, and I'm looking for 163 to be my low. So you get all the time to practice this, and you just wait, and you start putting these little. You'll start taking your boxes, and you'll put your boxes on here, and you'll start say, okay, I'll put my box right here. That's one of my little imbalance box. And I want to make sure we can get above that and stay on top of that, find some support of that, and I want to start going higher. So then you start clicking one little arrow over again, and you go, oh, looky, looky. Oh, I clicked it twice. It came right to my box, and then we got higher, and we're aiming for higher. Yay, it's doing exactly what I want it to do. And you go, okay, let's keep practicing. Oh, look, it took the highs. Yay, that's what I wanted it to do. Because that's a decision I'm going to make now. I've got a new candle. I make a new decision. And you get a chance to practice it and move your boxes around. And you've got all the time in the world. If you need 5 minutes to think about your decision you're going to make because you don't know this stuff really well yet, and you need 5 minutes or 20 minutes to look at that chart and say, I want to analyze all the things that's going on here before I move to my next 1 minute candle. And you take your time and do it that way. Slowly, 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 you start clicking your candles and you start to say, where do I want it to go next? What do I want to see? Where does it need to find support for me? And if it fails, you go, do I need to adjust my rules? What went wrong there? Why did I think it was going to go higher and it turned around on me? What has it broke through? What have I missed? Is there a little imbalance in here that I've missed? Have we broken an order block? Because invariably you're going to go in there and you're going to find, oh, okay, I missed that. It took half that wick. It closed below half the wick, so I'm expecting it to go lower now. That's okay. I need to keep an eye on that. Make a little note on a page on your paper in your study notes, screen capture that and say, here's why I need to be looking for things like this. That's studying, man. That is truly, for me, someone who is obsessive like I was and am about studying price action. Michael's not kidding, man, when he says you have to be in the charts. And this is the way you do it. You get all the time in the world now to do a 1 minute chart. And you get to go, where am I going to go next? Where am I going to go next? Where am I going to go next? And if you sit there and you go, I want it to do, let's say I don't want to see it get past this mean threshold of this candle again. I want to see this find support it here. And you see that candle didn't go above it. Then you just quickly click through it. You go, okay, I'm going to keep going. Okay, now I finally got the reaction I'm looking for. I've traded below this. I've got that high. I'm looking for this high now to provide support for me and this candle here to start pushing higher. I don't have any reversals going on here. I don't have any reversals going the other way. I still like that going higher, and I like this candle here and here for support. So then you start looking, oops, then you have to pull down without moving your chart over too far. So you wait for price to get back into here. You have a fair value gap that's formed here. You say there's an imbalance there, fair value gap. If it trades below that one little tick, I'm going long all the way down to finding support at these old highs and opens. It took one tick below it, went higher. And then you got to keep moving your charts without, you know what I'm saying? Anyway, you get the idea. That's how you practice. It's better than going back through a chart. For me, it's better than going back for the chart and saying, okay, I gotta, unless you're looking for a specific idea and you want to come back and say, I want to practice looking for fair value gaps. I'm going to go back and find every fair value gap and see how it acts off of every fair value gap. Okay. One little concept. I look for imbalances. I'm just going to run through my charts and look for small imbalances and see how many times we came back and found support at them. Was the fair value gap or the imbalance ran through? Which ones do they engage? Do they line up on old imbalances that happen way back in here? Does that provide a level of support for me? Is it the fair value gap? What is it? For me, I like to just go learn all those little basic things and then come here and apply it and see how well it works for you. Anyway, you got my ramblings. So found support at an old high, bodies traded through it, come back, find support at that. We're back inside this range and we're up into 178. And then 179 right there. See how we found some sensitivity at that? Now I want to see if it pushes through it. And we got this fair value gap sitting right here. That's at 180. there. Good. Now we want to see if there's uh, an appetite for this to go higher and find support at that. So we've closed above it now. Good. 179, closed above it. Now we're starting to go higher. So where's your next upside objective? Quick, give me your number. What's your next upside objective? Write a number down in the chat area there and let me know before it hits it. Too late, it's hit it already. It was 181 to 182. Actually, all the way up to 183. We'll see if we react off of that. It's the premium portion of this whole range. 189, Adi says. You're up here. You're on that range. We're just looking at this little range that you're in right now first. I agree with you, Hadid. That looks really good up there. But you're jumping one range too far. If it turns around on you and comes all the way back down, you jumped one range too far, too quick. So make sure you get confirmation that you take out that main threshold first, and then start looking for that one. Unless you just say, screw that noise, I want the bigger one, then that's fine too. Do whatever you want. Just remember you're skipping over arrays that it could just run up like this, come up and get that little trend line thing that those little trend line phantom people love looking for. So that trend line would come up to somewhere around halfway there and then peel away. Well, the trend line people will be into this one, not up here. See how that didn't take the high out there? And we get this little reverse happening here. This is why you can get beat up on that one, Hadi. That's why you always look for this, the range you're in first. So if you didn't pay yourself at that, or the rejection block, once again, you see me make that statement about rejection block. It's critical you remember to pay yourself there. We have this one here, and this one actually goes like this. If you're looking at that higher range, it extends from here to here. Right there. So if you're looking for that larger range, right there, that's the magic box from that low to that high, because we have an imbalance sitting right here, and it's all bear side, bullish side, and you have the imbalance. You have to include all of it. So you'd have to say, if that was my upside objective, anywhere inside that box, fair game. Also mean threshold, this candle, rejection block, these little imbalance in here, smaller range. You know what I'm saying? So if you didn't, it's just eating up some of your profits again. Now you're hoping for another double tap on that high, which if you've got the patience to wait for that, then good for you. I'm good. I'm happy for it. So now I look at this and I go, we've got all these highs taken out here now, and we've just taken out this little high right here, and I have a reversal starting to happen. So I need to see a swing below this low. Let's see if this gets support. There's a little imbalance right there, and it's already come up. Nope, it hasn't quite hit it yet. So you want to see one of two things. We want to see a body get above here to go higher, or we want to see a body get below here to go lower, back inside this range. And what are we sitting at right now? What time is it? We're sitting at 8, so 9:19, so just before the market's opening. Your mic sounds good. Thank you. It's nice to be nice to have my mic working, JP, as it wasn't yesterday. I think you have to cut out the first 20 minutes of the video. I should have edited that first 20 minutes out, because people will listen to that for And that's one of those things I was telling you about, your meta program. How long would you wait to see if something, the sound came on? Most people would wait, what, 30 seconds, less than 30 seconds, and go, oh, this guy doesn't even have sound working. And then hang up and then just quit before. And most people, I guarantee, wouldn't wait 20 minutes of just watching no sound. You'd say, oh, this guy has no sound. And they wouldn't fast forward to see if there was more sound or if, you know, that's a great example of like how many people would actually wait 20 minutes for the sound to come back on. Not many, but I was surprised there was like 400 views yesterday. Can you all help him by helping you by liking the stream? Oh, thank you very much, JP. Appreciate that. Thank you. I think because of this little ad revenue and stuff that they pay, just so you guys realize, I don't make money off this thing. I think I've made, out of the 280 some odd videos I have, I've just got into ad revenue stuff. I have $13 in my account. So for 285 videos, you know I'm not in it for the money. This more than pays. I just love sharing this stuff with you guys. So likes and all that are nice. I'd like to get people in here, help as many people as we can, building a community, helping people out with price action study. That's ideally where I'm after. So here's your next run up into that range. So you see how we ran above these highs with a body, you come back into them, find support, push higher, you get into that range there, you pull back into a smaller range here, fair value gap. We have not traded above below this. Remember we were saying we have a reversal forming here. If we trade below this on a close, we're going lower. Notice that we didn't. So we traded back up. We got above this little imbalance and that fair value gap again with a body. You're looking for this candle to provide support now. You want to see this pushing higher and taking out these highs and running into Hadi's level he was looking for, which is the 189 level. Curry fish ball. Good morning, afternoon, good evening, my dear. You're in like evening, right? This is evening for you. You're on the other side of the planet there somewhere. Another 7 or 8 hours. What side? Where are you at, Curry fish ball? Where's your? Because I remember you were saying you're heading off to bed. So unless you're a shift worker, you're my guess is you're in a different country. Yeah, it's 10:30 p.m. at night right now. Wow. Morning, Fiddlesticks from Texas. 10:30 p.m. Well, you must be over in Europe then, because even my Brit cousins are they're looking at the afternoon. You must be way over there, or you must be on a. Holy smokes, you would be 10 hours, 10 p.m. at night. Yeah, you're like you're way out there. See how it's just not giving us that new high? It's still back into that range. East of Asia, yeah. Asia, there you go. I was going to say, because when we were in Thailand, they're 13-hour difference, so you would have been a little further over. RS 10:30 Southeast Asia. Oh, you guys, I got some people from Southeast Asia. Yeah, welcome. I love your area. It's beautiful. Curryfish Ball and RS, thank you. Thank you for your support. Thanks for coming in. Hadi's like, I knew it was going there. I felt it, man. See, notice how we still have not broken those lows that we're looking for. If you break that low with a body, that's the indication for me that we're coming back into the range that you're in. We have not broken those lows. We have a little reversal going here. We did trade below that, but you got to get below this low for a confirmation. Yes, it's a change in direction inside a range from there to there. That's traded all the way back down into filling fair value gap, then pushing up higher. Now look for 189. Look for 189. And then we're looking for a run higher. Edgar in Spain, 3:24 p.m. Welcome for my Spanish friends over there. That's we truly have people from around the world now. That's great. I know Lucas is out in Vancouver, so that's on one end of Canada. I got Hadi, he's out in Toronto. That's the other near the other end of Canada, closer towards the middle, but you know that endish. I'm in the middle of Canada right now. This drive you nuts, Hadi. It's just still sitting right there, not giving you the high yet. It just keeps coming back, giving her a little tap, but we are still slowly climbing up higher, looking for at least 187 to 189. See if we can hit that one now. I don't know if you guys are following hockey or not, but our Winnipeg Jets are killing it right now. They've won 13 of their first 14 games of the year. 13. They've just hit a new record or tied the record with Washington, I think it was Capitals. I'm not sure. Hadi's like, wait for it. It's coming, man. There's 188. There's 189. He's like, booyah. Hadi moves to the sidelines with his cash in his pocket, doing a peacock thing around the house. You can strut around the house right now. You can do the Bart Simpson strut if you like. Well done, Hadi. Good call, buddy. There we go. Hadi, you're going to start setting up your own web channel now. Get people following you on your website. I don't mind, man. You guys start your own channel. Go out there and help people. Bless you. Good luck. Have fun. Help people out, man. Duplicate yourself. Find many ways to help people. There's nothing more happy and joyful than to see people pick up some stuff and then just watch their light bulbs go on and you go, oh, I used to love teaching that just in the first aid course. Every day teaching the same courses. I was working for St. John Ambulance teaching. I used to love it though. You could set my course, the time on your clock by the jokes I used to say. I used to tell the same jokes every day, and people would be howling their heads off. We have a great time. I'd be acting out shock, talking about shock and the mafia heart, the little Mexican lungs. Yeah, I had these, and I would act them out, talking about the shock and how the shocks affects these different organs with different accents and stuff. I used to have a blast in a first aid course. But, you know, people usually go to a first aid course and like, oh God, I got to do first aid again. Not mine, man. We had a hoot in my classes. I used to have an awesome time. So there's that upper fair value gap fill, the civvy there. That's the 191. So now you want to see a body get above 189 there. Oh yeah, what's your opinion on the election, Darren? Ooh, you do not want me getting into my belief about the election. There, that's the run on the high now. I like the idea of coming back into here yet, so we could still keep pushing higher. I'm looking for a cam model in here. That's cam 1 from there to here, 219. And then the fill of that fair value, yeah. And I wouldn't want to see it take any higher than that and come back into that order block there. So I have my own opinion about the election, but I'm not going to discuss politics on here. I've got too many people that support both sides here, so I'm not going to alienate myself. And my opinion about who won and who shouldn't win has no bearing on chart analysis. It's like religion. I won't talk religion on here either. I have my own views on that. I think it's important that we just kind of allow people to have their views and live their truth. As long as it's not hurting anybody, they live their truth, then I'm happy with that. So that's the Cam 1 model right now be hit, and see what kind of reaction you're getting off of that Cam model. So this is good. I want to see that, but then I want now for confirmation for me, I want to really see that start booking down below 150-ish. We can start breaking structure on the dip downside here. We start working our way through here. Then I'm looking for a run back into this range. We're looking for that draw on yesterday's relative or regular trading hour gap. That's what we'd be looking for today. I'm looking for a TGIF Friday. That's what we're looking for today. So we have a full fill of that at 220, I think it is. 224. If we start to close above 224, the line in the sand is 238. And after that, I'm not touching it. You wait and see. If it takes off without me, then so be it. It would have to trade above that and then come deep back into this fair value gap here on the hourly and probably retouch. This candle's open for me to be anywhere near thinking about going bullish on that. If it leaves without me, no big deal. I will wait till this afternoon and see if there's an opportunity this afternoon. If we take out these old highs here, if we take those highs out, bold candling, then see a reversal happen this afternoon, and that'd be something I'd be interested in taking. If you're not in on this already this morning, then I'll wait and see. And like Karim says, follow your rules, man. Follow your rules. It's a Friday. Don't go in desperately trying to grab money out. We just nibbled $200 out of there this morning and $5,000 in a gold trade. Given I didn't really manage the gold trade, I just looked at it and went, "Oh, that looks like a great place for a nice long." Come back later, oh, $5,000. I'll take that. It's not the money. I didn't manage that one properly, so you can't even consider that gold trade a great trade because it's not about the money. It's about following the rules and trading principles, and I put the trade on and left it. So really, we'll call that luck. We won't call that any skill at all to manage that. Sounds like the market from 7 a.m. to 9:30 price action trades like after 9:30 for forecasting price action. Sounds like the market from 7 a.m. to 9:30 price action trades like after 9:30 for forecasting price action. Yeah, till 10 o'clock. Usually you wait for that 9:30 to finish up and 10 o'clock. If 10 o'clock just cleans out these highs here, a lot of people have turtle soups above that level. If 10 o'clock cleans out that high and we get a nice little silver bullet entry for a short back into this range and it continues to go all the way back down to our 30% on the day, 20 to 30% of the weekly range, then you might catch that right off the 10 o'clock, taking out that high there and look for the silver bullet. So again, those are the things I'd be looking for at 10 o'clock, not so much 9:30. So if you extend, Craig, you extend it from 9:30 to 10 o'clock, you can get after 10 o'clock, you should have a pretty good idea of where it's going to go. But wait for that opening range to set itself up before you get an intraday bias. Mostly you can get your bias by the daily. And hourly usually gives me a good indication. But, when we're sitting here going, oh, we have a consolidation, we have a reversal, we've traded below that low through this candle and back into this. So the fact that we're actually trading above and through this candle's low and did not leave a portion of that open does not bode well for bearishness for me. Even though it did come back and fill up, it doesn't bode well. I'd like to see a portion of that stay open using this as support and that to stay open. It didn't, so now we're back into this candle and we've already traded through the 24, right? We're up at 28 now, 30. So we're already through this. So I've lost my luster to go low. So we're looking for the potential for this to be taken out at 10 o'clock. Or mean threshold of the consolidation, which is mean threshold of that candle. And we're right close to it right now. 135-ish, 135, 140, or 240, I should say. That'll be the mean threshold of that up close candle. Now, do we get some? I should actually spread that open so I can see what's going on there. Always spread the chart open nice and wide because there may be an imbalance in here you're not looking at. There's one little fella right there. What's the low? The open is 32.50. The close is 32.50. Nope, there's no imbalance there. That's right to it. 32.50. And we've had a nice little reaction off of that. It's right back into this candle's open. I like that. So for me, we'd have to get through all of this, down through these candles to go bearish for me. And it's just a lot of run. It's quite a sizable run. It's like 75, 80 handles before we start getting through something. But there is a little fair value gap here. You see that one? The first fair value gap on the day. That's just formed, and we have another little volume imbalance above us. So if we can find support off of this and go lower, that'd be a great place to do that. It's all filled. Yeah, that would go lower. We're inside that range. I like that going lower.
Order filled.
Now, I would not want to see that get above here. That mean threshold. It's probably going to take out those highs now. It's already through it. Let's give him an opportunity to
Order
get out.
filled.
I'm going to get out. That's the rule. See, Karim, you have to follow the rule. It traded above it right there. I'm out. Give me one opportunity to say, get your trade off. If it goes higher, then I'll be happy I got my trade off. There's a fail safe. That's the rule you have to follow. Now we'll see if it takes out these highs here, and I'll be happy that I followed my rule. So here's a good example, Karim, of I took a loss, but my rule told me you're going to get your ass handed to you. It's going to take that high out. And right now would have been squeezed and I would have been really beating myself up for taking that. So even if it does turn around and come back down lower, it's not in anything in here now that I want to play with. It's too choppy, so I'll leave it alone. So there's your example of follow a rule, stick to your rules. If you take a bit of a hit, it's better than what you're going to see here now. With that taking out that high and saying I would have got hit even more. And then if it switches up and closes below it again, and then above it, see how you only get one opportunity to beat me up once. If I'm on the wrong side of it, I move and wait for that high to get taken or this low to get taken. So you can get back in sync with it, because right now it could go either way. So you wait. You wait. Hans, 50% of the regular trading hours hit. I don't know why I'm not getting that damn thing appear on my chart. Let me have a look at my regular trading hours. Yeah. I usually have this thing will pop up and give me my regular trading hour gap on here, but it's not doing it. I want to see that's the regular trading hour gap. We traded all the way through 50%. Okay, so it is going lower. So it went above, even traded through the mean threshold. So now you just wait for a break in structure. All are equal in trading. When we use the fib to find the 20-30%, do we always mark it from the low to the high of the weekly candle? Yes, we do. The thing is, sometimes the weekly high is not established until after lunch on Friday. Not always, but that's you might have to wait till after lunch on Friday. See how there's that tiny little piece here on the 15 minutes still left untouched right there of that fair value gap. And that's the new week opening gap. We're just shy of filling it. So as Michael would say, that's a good sign if you want to go bearish. We're through this level here now. Always put it on before we open. It's a good idea to get into that. I do have an indicator that puts it on immediately, like a few seconds before the open. It puts it on like a minute before, and then just adjusts after the thing comes on. But I can't find out which one it was. Is it this guy? Nope, it's not that guy. No bodies down here yet. Small range. Don't get pulled into that. We're going lower yet until we break that low. That's the rule. We've got to have a body break the low. Just because you see this, if you feel the urge to get in on that, on the run down, it's not confirmed, like I said, until for me, until I break a low. And even this is not that great. Ideally, I'd like to see this low get taken out, but this one might work for now. We've had a wick get below there, but we haven't had a body get below it yet. We've had this tested, we've dropped below it, then all of a sudden we ran all the way through it. You see that? And because we've taken out that low, you have to start looking at these little imbalances here and say, I'm on the wrong side of this. We're back inside this range. The moment we close above that, this goes lower, this goes higher. Which one are you going to go in? So wait, because now you're back and forth inside a range. So don't mess with it. We have this imbalance above us. So the premium inside this higher range here is that first fair value gap presentation, and the discount one is way down here. There's a fair value gap for us here, and there's also a fair value gap there. Sibby, Bissy, Michael considers there's a balanced price range. We have sell side delivery and buy side delivery. Pull back into that range. We're right back up into a pull the high to the low, or this one right here to the low. The reason I want to pull the high from there is because this whole range, either one of those, that one, or that one, are all supported by that fair value gap there. There's nothing inside this one. It's this guy here. So pull the whole range and you'll find that you're at the 60 to 72% or 62% to 70% option trade entry reversal. And you're back into that small little consolidation right now for a CAM 1 model. CAM 2 would be right back inside that fair value gap. There is no cam 3. So bouncing off of this one more time for a short, and then you're back to short, long. You're inside that range again. So you have to see this low get taken, and we're back to the original ideas. I want to see this one get taken on the downside. Or you want to see these guys get taken on the upside, use the support to push higher if you want to go higher. If that helps you guys. Okay, we got 37 people in here and 23 likes. I'm giving you guys some gold stuff here. Hit the like button if you like it. Oh. See how we've traded up into that now? Now you want to see if we trade through it on a close. And we did not, you see. Now draw that wick out through those up close candles. And the highest up close candle, you want to look for its mean threshold to hold. That would be a CAM 2 model right there. So you want to trade back into the range again now. CAM model, he says it's a CAM model on the 15-second chart. So there's a CAM 2 right there. And we have a CAM 1, 2, 3 here. If we can get inside this, we have a reversal. If we can get below here with a close, wait for body to get below here. Oh, we've got a body below this candle, so any trade back up inside these two candles here is a short. So I'd like to go short off of there. Is this ES? There's a CAM 3. If we trade above that on a close, or on the wrong side of that. I think that's above 3 already. Yeah, we're on the wrong side of that. It's going higher. I'm looking at this. I should put my fib tool out on that. 50%. See that? We stopped there. Traded above and like, on the wrong side of it. Should go higher now. See how you get your opportunity to get out of it again right here? If it moves to the sidelines and wait. If it changes on you and goes in different directions, it's no big deal. You wait for this structure break, either higher or lower. But you see how that gave you an opportunity there. If you were looking at 50% of that range, of that leg, 50% puts you there. So if that's your short, and then all of a sudden you go, oh, I'm on the wrong side of this, stop loss is here. It gives you an opportunity to get out of your trade once there before coming back up and taking you out. So even on that one, you could still break even on it. Cam 2, you're going to take a hit. Cam 2, oh no, you don't even take a hit on that. So here's your Cam 2 model. And here's how you get out of it if you're wrong. So 50%, if you get on Cam 2 here, you go, I'm going to go short. All of a sudden it trades through that on a close. You go, nope, I'm on the wrong side of it. Don't even take the trade. You wait for it to freeze on that. If it doesn't, then you don't take the trade. You wait for the Cam 3 to happen. Cam 3 hits. That's 50% of that leg right there. And then as soon as that closes above there, you're wrong. Comes back, gives you an opportunity to break even and wait. Move to the sidelines now because your stop loss just got hit. Bing. That's how Cam 3 and the failsafe works. So that would have been a zero-sum trade. I think I got in a little too early and got out on a loss instead of waiting for it to come back in there. So for Karim, my rule is to wait for it to come back to that level, or my rule is that if this candle traded above and I was on the wrong side and it opened and started going higher, I'd automatically close out my trade because it could gun right for your stop loss and not actually come down and tap it for a while. So other people might have a rule that says I'm going to wait. It's either going to take my stop loss or it's going to give me an opportunity to break even, move out and sit on the sidelines. I cut my losses. I don't gamble on this coming back, though it happens a lot of times before it hits that. So now that high has been taken, now we get the continuation on the downside. So you wait for a break in structure and then use that for support to go lower. If that makes any sense to you guys. And see how this is just choppy consolidation, so it's not really good price action right now. Anyway, that's a 15-second chart. So watch this close below here now, find support at that. Wicks are not what we're looking for. So it came all the way back into that first presentation, all the way to the very bottom of it, beautifully, and now we're getting a reaction off. So we still don't have a body down there yet. So we have traded below this gap, traded back up inside it. You want to see if this holds price here now. There's a little imbalance here as well. That will balance that all out. Then you want to see it drop down below here again. So you can see how that, let's see, excellent. So now I want to see this, it's got to get through that on a close. So watch the next 1 second. We're getting there. We've closed below here now. I like that. Now I want to see if that continues going shorter from here. I'm going to go short off of this candle here. Stop loss will go just above this here. And I'm just going with, as price action's just sitting here right now as I see it. I see it going lower. So I don't want to see it get through this cluster of candles here and that fair value gap again. I don't want to see it because we've already rebalanced all this here. We've taken out that little high. We've come all the way back to this little tiny imbalance right here. Look at that right there. I was looking at that going, why do we just take that out? What are we looking for? That candle's, look at this candle's close. The close is 21 or 25.50. And what's the high of this candle here? The high is 20, 22.25. And the low, the close, no, the open, sorry, is 20. 2260, and the high of that one is 2220. So that comes right inside that little imbalance right there. Hits it. Oh, it came back and took me out. There you go. Just enough. Yeah, 10 o'clock. That's why you wait for 10. Didn't follow that rule. Now, do we take out those highs we're looking for here for 10 o'clock and then wait for a silver bullet? So you do not want to see it trade through this level and through these candles. And it went right through it and did not give you an opportunity to, that's why the stop loss was sitting here. If we run through that level, you also have this reversal here. We've ripped all the way through. Real quick, aggressive, 10 o'clock, highs taken now. I'd want to see this get below here to consider going lower. If there's a delay, refresh your YouTube. I have it set for just hit refresh on your channel. I see that there's a big, like we're like almost 30 seconds, 45 seconds behind me here, hey? You're right, Craig. That's the rule, man. Wait till 10. I got in a little overzealous and you get slapped. It's a good thing it's a demo. If you've got that feeling, just type it in there and say, hey, aren't we supposed to wait till 10? That's the rule. And I'll go, well, you're right. We got to follow the rules, man. You don't follow the rules, the system's out to get you if you don't follow the rules. And that's a good example of getting hit. And it's, see how it's, this is high resistance right here, even in a 15-second chart. So wait for your opportunity to set itself up. So we might be hearing some noise for the first 15 minutes or so, and then see if it starts to smoothen out a little bit after 10 o'clock here. So yeah, don't be afraid to tell me what you think. You could say, hey, look, aren't you supposed to be waiting? And I'll be like, you're right. You're right. You're right. You're right. That's the rule. Gotta follow the rules, man. Can't be too keen. 64 seconds now. That's terrible. Did you guys refresh your screen too? I'm gonna refresh my screen here and see if it helps. I'm going back in to refresh my screen. ThetaWaveTrader live commercial. That one's a little better. Nope. No, you're still 10, 15. You're still 7 seconds behind. 10 seconds behind. Now I'm looking for that. Got in a little late. I like this one here. See how we got below it? Come back, give it a tap right away. Looking for it to go lower now. And unfortunately, I'm in a discount array already. But I'd like to see that start coming down below. We're already in that extreme discount. If you want to see this really start getting some legs and getting out of here, I like this. Now that we broke through that one, I wanted to catch that right off of there. And it's right off the regular trading hour or first presentation fair value gap as well. So I'm just going to move that into break even because I'm way down into a discount range here. I want to see that really get some legs now and start pushing through. If that reverses on me, I don't want to take another hit. So there you go. See that reverse? We're already right into the rejection block right there. Pay yourself. Pay yourself. That's why you quickly move to look at how close that came to taking me out. So looking for lower. Now we're going to move myself into order block. Anywhere inside here can come back and take you. Order blocks open price. Nice reaction off that. I want to see that just start coming lower now. Take me out. Took out that low. So get that order block now. Some support. We're coming back inside that range again. For your information, when you trade on a 15-second chart, it changes your first presentation. Oh, it does. You're right. It does. That's the first presentation on the. But again, if it's the first presentation, whether it's on a 15-second chart or 1-minute chart, it's all fractal, right? So treat it as a fractal on a 1-minute chart, 15-second chart. See how precise it is in a 15-second? Now go to a 1-minute. Where does it sit at? Look at the 1-minute. It's beautiful. So it's all fractal, depending on whatever time frame you're in. I like this 15 seconds, certainly gives some detail. And it's not, this isn't acting on a 1-minute one, it's acting on a 15-second. Is that the 15-second one? Because that does not look like a 15-second open. 9:30, 9:30 and 30 seconds. Yeah, you'd have to use the 1-minute. That's not sitting. Either way, it looks good because that doesn't make sense. That's not an opening gap. It's like right there. It's a little tiny one. Wouldn't even be that because there's a wick that comes all the way down there. I don't even know why that marked itself there. So we're going to wait now. We've gone through that level. We've traded above it. We're coming back inside that range. High to low, pull your fib tool, or have a real good set of eyes to look for what's 50% of that range. It hit 50% right there. Now we roll over if we can get back through that level on the close. You did. And then it went above it again, back into this fair value gap here. Small little run high. You want to see that continue pushing lower. I'm wondering if it's all these damn commercials that keep popping up. That the commercials keep pushing it back. Okay, now we've broken that low again. Come back up, find some support at that.
Order filled. It's not the kind of resistance you want to see. You want to see this moving quickly. This high resistance crap. I give it a couple more minutes. Get some legs to get out of here. And you got this, again, the downside objective would be if that weekly is, what do you say it was? Anywhere inside of rebalancing yesterday's range, I think would be nice. We'll see it accelerate from here. You want to see it find support at that little consolidation and start going lower. This tiny little imbalance above us right there. I want to see it get some real acceleration here now. And see this is just a slow, insidious grind. It's just high resistance, right? You got to weather this, or you got to look at this and say, this is not the kind of stuff you want to participate in, and wait for cleaner price action. Oh, that's my phone. I'll be right back. All right. Welcome to high resistance. So the stop loss for this is right here. See now we've broken, got a little imbalance right here, a little fair value gap. We've swept these lows, taken this high, find support. Now if we lose this one, then we're going higher. And we're already on the wrong side of this, so we're inside this range here. Now I'm just hoping this holds. If this doesn't hold, so the rule is you can either decide I'm on the wrong side of that, get out, and we'll wait and see if that holds price. You can already see why it's already started accelerating inside this range. So if you're on the wrong side of it, here's where you say I'm out, I'm on the wrong side. And if we get a body trade above that, it's going to take our stop. So we go from box to box. That's the internal range liquidity hunt. And if we trade above that box, we're running for higher range. And the fact that we're just traded multiple times into that just tells me that probably wants to make a little pop up there and take me out. So that's the one where you can decide to get out here for your short if you're wrong. See how it just took us out there. So that's the reversal there. And then the confirmation is a break in structure here. Came back, found support at it. We're coming internal range liquidity. So there's your line in the sand. If you break that right there, comes back, gives you an opportunity to get out before it takes your high. I just wanted to see if that was still going to hold a little longer. It didn't, but that's where you can get confirmation that you're on the wrong side of that. You're back inside this range again here now. So now you want to see it has to take this low out here. Your high resistance So your rule, Kareem, if you're looking for your rule, the rule is there. My other rule is I want to see if it still holds inside that range. It didn't, and there was a small distance between my line in the sand and the taking me out was right there. So look at that larger range now. You're at optimum trade entry reversal. You're back into that first presentation fair value gap again. So now we're back off of this one here. Support to go higher. We have a little high taken, a little busy. I don't think they're going to leave this untouched. We have a fair value gap above us, and the upside objective would be somewhere around 21.20, 21.21.1 to 21.21.6. That's why you don't copy me on a trade. If you're following the standard rule, which is if you see a reversal happening after a low is taken and it breaks a high, then it's a swing reversal inside the range. That's where I wanted a bigger swing reversal here, so that's now got it. We're looking for higher prices now inside the larger range, and you don't start getting back into bearishness until we swing below this low. And again, high resistance, right? That's what you get beat up in. Okay, model 1. Model 2 should put you right at the edge of that imbalance again, or that fair value gap, first presentation. So if you're trading cam to cam, as soon as you hit this old high here, you're trading that distance in between here. It's a small distance for a small profit. There you go. So it'd be a small profit there from cam to cam. Now what you want to see is it get through here. You want to see 173 to 176 get taken on the downside, and we'll think that'll start showing us that we're looking to extend this range again and continue getting back in sync with going lower. If not, we're back inside that whole range again from here all the way back up to 195 to 198.9. So cam to cam, retracement again, reverse, order block. Almost 62% of the new range and reverse again to the upside. Yeah, pull the fib tool from here to here. So this could be the next price leg higher. You want to see if that cleans out these highs here now. There's the 9.3, 9.2, 9.5. Ooh, I got up and down coming here now. So now we're in this choppy little consolidation between cam models here. Yeah, if it breaks this to the upside and finds support, you got to get through that 215, 216 area to go higher. Yeah, you'd want to see it clear that for sure, Hadi. Okay, so that's the 196 to 198 area we're talking about. So that's hit. Now I want to see if that we end up trading through this or not. I'd like to see it just reverse here again and start coming back into this. So it's starting to compress. Now I want to see that come all the way back down to somewhere around 185. See if that compresses. This would be a box-to-box run if this goes. You guys find the box that I was looking for. Are there time parameters when trading TGIF trade should be entered? Remember I was saying when you got all this consolidation and this kind of high resistance crap going on here right now, wait for it to smoothen out. And usually in the afternoon, around 1:30 to 2:30, you'll see the high of the day should form. And then the pullback into TGIF Friday usually begins in the afternoon on a Friday, though it can happen sooner. That could be your downside objective for the day. So time is important, yeah. 10:30 or 10 o'clock, you usually get a good feel for what the market's going to do at 10. And if you still get this consolidation crap going on, then wait for 11 o'clock reversal and see if that pulls back into the range. And if that's not, wait till 1:30, 2 o'clock before you look for an opportunity and wait for something clean to set up. Okay, there's the upper one at 211. We're through that first fair value gap again. And we've hit that premium array inside this whole range here now. Now do we come up higher into it to 215, or is that all you need to now turn around and start running out these lows? See that cam to cam model we talked about? You get a reverse. Look for this candle to get taken to the upside. If you don't get that in here, upside finally happens here. We close above it, trade back inside it, go long, look for confirmation above these old highs here, come back, find support at them, keep pushing higher. We now have a fill of the fair value gap here. Adivse risk-free. Just come back into that range, into that premium rate box, box to box. Now if it runs all the way through that, I'd like to see this run all the way through here now. We have a reversal right here. Trade below it. Don't get an opportunity to get in on it. Wait for this low to get taken. On a close, the body trades below here, comes back up, finds support. I want to see that book out of here now. I want to see price action clean itself up here now, start getting a nice run down. And that's your internal box right here. Oops. That's your box you're looking for. Right there. Let's make sure we got that lined up on that one. See it hit it right there? Bing, hit it. A little reverse. Wait for structure break. Trades below it, comes to it. Now you want to see this one give way. Box to box, internal range. Want to trade through that now. Now we know the range is going to extend lower. That's why you got to watch those, Hadi, when you're looking at those ranges. Always think, don't start gunning for that when you've got to see it's got to get through here. So make sure you pay yourself inside that box or at the box. You got 1, 2, 3 levels here. You really want to see it gun through that. So now this is relative equal highs. We could get, because we have not traded through here yet on a close. We've just had a run on this rejection block. And now we're getting a pull back inside this range. So if we go from box to box, it could trade all the way back up in here again. Inside shitty consolidation. If we want to see that extend down, I want to see this consolidation, hold price, and start driving right back through this consolidation. There we go. That's what we're looking for. Does that make sense, Adi? So now we've we've extended the range here now. We've traded below it, through it. Now I want to see this provide a level of support. Start getting through that lower level. So don't deny your rule of internal range liquidity hunt. And you do good box to box trading there, Hadi. That's your forte, right? So now we've got this low taken, reversal. This order block gets taken. We're back up inside this range again. You can see how we've already traded through that on a high, a close, I should say. We came back and tapped it. Now you're looking for this to go higher inside this range and use this candle for support to go higher. If it trades back through, come all the way back down into here and still go higher. For confirmation, you want to see this high get taken for a run back in here. Otherwise, it's just a change in direction inside this range. Maximum rejection block again, hit. If it rolls over and eats through that, then we're looking for a run down below these lows. See that? Like right on it. Now we're digging down. I like that sign. There's a little imbalance right there. We're bouncing off of it. There we go. Lovely. So again, make sure you're following the rules. The rules are make sure that candle, we have a change in direction inside a range. We didn't get an opportunity to get in on that. You don't get an opportunity to get in on that because that's already up in the premium portion of this small range. So you have to see this get taken to the upside for a larger range. If it doesn't, then you're back to these again. And if they get taken on the downside, then we're looking for further extension on the downside. Ron, let me give you your carrot, buddy. Let's see if we can get this algorithm motivated. Ron comes out of the corner, out of nowhere. Where's my damn carrot? I gotta be at my brother. I'm supposed to meet my brother for lunch, so I'm gonna be out of here. This is obviously consolidating again. See how we've traded above this level now, back into the range again. So you want to see that extend down. It just takes out that low there. Look at the low close on that one. The low close on that one. We traded below it, extend the range, even if it's so much as one little tick, and you start running back through it. We have a reversal. Find support, trade above, come back, get some support, back inside the range again. Anyway, that's where my carrot's going. I'm looking for further downside today. Uh, Despite all this crappy stuff that's going on here, I'd like to see this come back down today. So I gotta go, gotta have a shower, go out and meet my brother for lunch, and I will see you folks on Monday. I hope you have a safe and prosperous weekend. Take care of your family. Love everybody out there. Give everybody a hug. And you own a home phone? My mom does. They're old school. They have their own home phone. I keep trying to tell them, you still have a landline? Yep. They even got that old rotary dial too. I think one of those rotary phones. You gotta love being 80. They're so cute. Anyway, I will see you guys on Monday. All the best and take care. Thanks very much for tuning in. And if you're new, pop in every day. We're here reading price action. And if you like what we've been doing today, hit the like button. I always appreciate that. And I will see you guys on Monday.